Well, hello, this is Benfords Law, this is part one, and this is the theory. We start off with Frank Benford, who was a physicist at the GE Research Laboratories in Schenectady, New York, and he noticed that the first few pages of his log tables were more worn than the last few pages. He figured he was using the front of the book more than the back of the book, because maybe in this world there were more numbers that started with low digits than with high digits. He set out on a crusade. I believe it took him 6 years, 20 lists of numbers. And what he did, we can see that these are numbers from diverse sources. He counted how many of the numbers started with 1, 2, 3, 4, 5, 6, 7, 8, or 9, and we can see that on the top row. And then at the bottom, he averaged it, and we can see that 30.6% of the numbers started with a 1, 18.5% of the numbers started with a 2, making a huge bias in favor of the low digits 1 and 2. He then used some integral calculus and came up with what we've grown to love and adore and called Benford's Law. And in the left column I see that I expect 30.1% of the numbers to start with a 1, but only 4.5% of the numbers to start with a 9. 0 can be a second digit, as in the year of 2018, and we go from about 12% down to 8.5%. The higher digits always have the lower probability of being the first digit. Well, I came across Benford's Law when I was doing this class as a PhD student, and round about page 86, the author said that if we expected the digits to be equally likely, this was not true, and he said that would be an improper prior, and actually he simply gives Benford's formula about 2/3 of the way down the page, but he doesn't even actually call it Benford's Law. Now, from an auditing point of view, let's think of two rather important concepts. Number one, the Null Hypothesis. The financial statements are fairly stated. In practical terms, there is no material misstatement. This leads to a statistical hypothesis. The journal entries conform to Benford's Law, or the journal entries do not conform to Benford's Law. What we would like is we would like a one-to-one relationship between the data conforms to Benford, implying that there's no material misstatement, and the data does not conform to Benford, implying that there is a material misstatement. Unfortunately, in life, this is not necessarily true for a number of reasons. Number one, maybe the data wasn't expected to follow Benford's Law. If Starbucks do a journal entry for each sale, which they probably do, and they sell millions upon millions of cups of coffee for $2.19, and that's their main seller, we are going to get a big spike at 2 or at 21, leading digits 21, simply because that's their biggest product and that's what they sell most of. Secondly, there might be some inherent feature in the data that causes some of the digits to repeat abnormally often. 20 years ago, we traded stocks in eighths, and at least, well, that would apply to the ending digits. They'd be whatever the decimals were for eighths. Companies split their stocks regularly, meaning that they kept them in a range. And people avoided odd lot purchases, and these were purchases that were not multiples of 100. So these were avoided, so we would see a tendency towards multiples of 100. Third, the data actually follows Benford's Law, but for this particular here, it was simply an anomaly. Fourth, some of the data was in fact fraudulent. And this is indeed where Benford's Law pays off. My data does not follow Benford's Law, and it implies that there is a material misstatement. We get back to the second feature here. This was an analysis that I did many years ago of the amounts that customers wrote checks for. So we had lots of checks, we had the digits of the checks, and in the left column there, in the first panel, we go from 10 to 99 along the x-axis. The line is Benford's Law, and the bars are my actual proportions. And you can see that I have spikes. I have excesses of numbers that start with 10, 15, 20, 25. I'm looking at the very spiky parts there. 40, 50. Then what I did was I looked at the last two digits, and I saw that the cents amounts were double O for most of the time. I then looked at the number duplications, and I said, what actual dollar amounts are people writing checks for? And you can see the listing over there. On the left, we start with 100, then 50, then 20. And it turned out that people were writing checks for round amounts because they were cashing these checks at the cashiers, and they simply wanted a round number. It's much more convenient and easier to keep track of. And so this is simply a feature of the data, which means that it doesn't follow Benford's Law, not because of fraud, just because of some inherent feature. Now, which data set should follow Benford's Law? I need to divide my accounting data into the first two categories there: transactions or balances. Transactions are one-off things that happen. You buy something, somebody buys something from you. It's an exchange that happens at a particular point of time, and it isn't repeated. Might be repeated later on, but it's independent of the second purchase. Balance. This is the value of a revenue, expense, asset, or liability account at a point in time, but it can also be the population of a town. It's a balance. We have the old balance. Then over time, people get added through births and people moving there, and people get removed for various reasons. And then we have a new balance. So we have to keep these two in mind, because both of these types of data will follow Benford's Law, but for vastly different reasons. Now, as for the first one, transactions, it will follow Benford's Law if my transactions are random drawings, random variables, and I'm looking at the bottom set of boxes here, the random variables from a random set of probability distributions. So, this is from Berger and Hill, 2015. You can read his book, their book, and what this theorem basically says, if I have lots of numbers all coming from different random distributions, this random set of random distributions will follow Benford's Law. And that's why transactions will follow Benford's Law, if indeed that is the underlying process. For balances, a geometric sequence will follow Benford's Law, and this is an example of a geometric sequence going from 10 to 100. I'm looking on the y-axis. I'm going from 10 to 100. And you can see that I have 1,000 numbers. My smallest number is number 1. My largest number is number 1,000. You can't see the number 1,000 on the right, but it's there. And now I have the sequence of numbers, and it starts at 10, and that's the line curving upwards. And if we look at the numbers going from 10 to 20, you can see that they go all the way out to approximately number 300. So I have 300 numbers starting with 10 to 20, and in the steeper part on the right, I have very few numbers starting with 9, or relatively few numbers, about 4.5% to be exact. And if my data is a geometric sequence, it should generally follow Benford's Law. There's a bigger geometric sequence in case you didn't see the first one. Now, imagine a whole group of towns. Each town has got a population, and each of these populations is an approximately geometric sequence. And then I take a random number from the first one, a random number from the second one, third, I'm going all the way up to 8, and we can keep saying this, random from the 8th and the 12th and the 18th. So each of these numbers is a random drawing from something that approximates a geometric sequence. In that case, the data will also follow Benford's Law, and we'll see an example here of it going almost perfectly. These are towns and places, towns and cities in America, and I looked at the data for 2009, and I got 19,500 numbers. We can see on the left here, I get the total for New Jersey, but in New Jersey, I have lots of towns and cities. Each of these towns and cities has got a first digit, a second digit, and the like, but each of these towns and cities is an approximate geometric sequence, and I'm doing a random drawing from each of these. Beautiful, Benford. On the bottom, we go 1 through 9. The bars are the actual proportions. The line is Benford's Law, and we can see that the height of the line, the actual, especially for the 9 on the right there, the actual and the expected are spot on. When I look at the first two digits, and the first two digits go from 10 to 99, again, I get a near perfect fit to Benford's Law. The bars, which are the actual, and the lines are nearly perfect, and that is an amazingly good fit to Benford. These are the last two digits, so each town has got an, I'm going to go back here, each town has got an ending digit. We can see there 73, 09, 97, 40. And the ending digits are almost evenly distributed because under Benford's law, as we go to the third and the fourth and the fifth digit, so the chances of the digits become approximately random. So these are the county populations. Now I only have 3,141 counties, so I have fewer numbers, and we have 19,500 towns and cities. And for the first digits, nearly perfect, but slightly choppy here for the first two digits, even though I have 3,141. So, assessing conformity to Benford's law is a little bit tricky, and what I developed was something called the mean absolute deviation. So we're going to have a look at this graph again, and let's go. I can see a deviation on for the first digits for the 5. So you can see we have the line and we have the bar below it. The difference between those two is the deviation. And if we go to the 2, we can see a deviation in the other direction. The actual is more than the expected, and I'm just looking at those differences. So I took 25 data sets and I looked at the average deviation for each of these data sets, and then I sort of ranked them and I said, you know, these data sets were all pretty good data sets. Why don't I use this to formulate some kind of reasonableness test for the mean absolute deviation? And so if we look at the top there, for the first digits, if the mean absolute deviation is in the range there of 000 to 006, we'll call that close conformity. As the mean absolute deviation gets bigger, we'll go to acceptable, marginally acceptable, and above a certain point, we'll call it non-conformity. This generally is how we will assess whether a data set conforms to Benford's law. Now, how would I find fraud with Benford? What I need is a number of things to happen. One of them is if a lot of different people all do the same thing. So, by the way, I'm still back with the census data. I'm sorry to make you dizzy. What I did over here was I took samples of about 500 records. So I took the first number of states that would give me approximately 500 records, then the second group of states that would give me approximately 500 records, then the third, fourth, fifth, and sixth. So I'm taking those 3,000 numbers and dividing it into almost random samples of 500. And watch what happens. When I go down from 3,000 to 500, this data has all the properties that make it suitable for following Benford's law. This gets very, very messy. Watch. The mean absolute deviation, I'm looking at the top right here, is 0014 for all 3,000 counties. 0014. When I break them up into groups of 500, the mean absolute deviation rockets to not 0014, but I can see the smallest number here is 0032, and the largest is 0039. Simply by taking a smaller group, I get a larger mean absolute deviation, even though the underlying process is something that should give me Benford's law. Now, how do we get fraud? A lot of people have to do the same thing. This was a fraud study that I did, and I was looking for amounts credited, so where the employees would credit the bill of an electricity user. And we can see right on the right there, we have a nice big spike at 99, which means we have more numbers beginning with 99 than what I expect. In fact, I have twice as many numbers beginning with 99 as what Benford's law would predict. And when we go and look at the actual numbers, we can see that some customers actually got credits for close to 1 million kilowatt hours. And the way the fraud would work over here is the employee would give the customer a credit. The customer would thank the employee by giving the employee a present of some sort. This falls under the heading of bribery and corruption, so can't be done. So what I want is I want a lot of people to be doing the same thing, and when I look at that same thing, this is some clue that fraud has happened. Alternatively, in diagrammatic forms, this is what I want to have happen. Watch. I can see the line. The black line is Benford's Law. For each of these bars, I'm off by a little amount. You say sometimes we're over, sometimes we're under, and I've chopped the right-hand side off, otherwise it's just too busy. What I would like is the B, the blue, to represent what Benford's Law was expecting. There's a small v for the variation or the variance. Each of these has just some natural random variation to it. And the F part, that's my fraud. I actually want my fraud to take the this 3.9 and to raise it from where it is in blue all the way to the top. It needs to make this spike really big, and when that happens, now Benford's Law will start talking to me, or this is at least a type of fraud that Benford will detect. Let's have a look at HealthSouth. This was by Weston Smith. He was the controller for HealthSouth, and he was one of the people that started the fraud, and this is his article in his own words. What I care about is the middle part here. It says the journal entries themselves were kept below 5,000 to avoid detection by the auditors. That was because the auditors only looked at numbers 5,000 and higher. So what they did was, at the bottom of the page, at the end of this repeated exercise, over 126,000 fraudulent journal entries were posted quarterly. So what I thought was, let me get a data set of journal entries. There it is. It's a little bit messy. I have some spikes, big spike at 50, but this is a data set of journal entries. And what I'm now going to do is I'm going to up the number by 10%, and I'm going to post 10% of the whatever the count is here. I forget what it was. I'm going to post numbers beginning from 20 to 49, because remember, he kept it below 5,000. And there I do it. And if we look at the area from 20 to 49, we can see that we have an excess of numbers beginning with 20 to 49. But you know, it's not that blatant, even though 10% of the numbers have been fraudulently added to this database. When I go and add 20% of the numbers, starting with 20 to 49, it now becomes more obvious. But at least we need some kind of a trained eye. We need to look at it and say, okay, I think I can see what's happening here. I have more numbers beginning with 20 to 49. I think I need to take a closer look or investigate further. And this is 30% of the numbers starting with 20 to 49. And this is the type of fraud that Benford's Law will also pick up, is where we have added numbers in a tight range, and we've added a lot of them. And when we add a lot of them in the tight range, this is what the graph ends up looking like. And this is perfectly Benford's territory. If I go back to the indictment and I look at how bad this fraud was and how blatant it was, if we look near the bottom, it says the assets were overstated by approximately 2.7 billion. And the cash was overstated by $370 million. Well, let's look at the cash that was actually reported, and now I'm at the top of the page here. This was their balance sheet. Cash and cash equivalents, $389 million. I'm going back. Overstated by 370. On the balance sheet, $389 million. This means that there was approximately 19 million actually there. The 389 was overstated by 370. And when you have to make up a lot of numbers, in fact, most of the numbers must be made up. This is also fertile ground for Benford's Law being able to detect the fraud. This is where I think Benford would work, as long as we actually know what we're doing. Journal entries, most notably what I call manual entries, not the system entries. Large swaths of errors or fraud could be detected by journal entries that would be quite un-Benford. Cash on hand, we just spoke about that. And other types of balances where people simply make up numbers and add these made-up numbers to the good numbers. You could make up numbers for accounts receivable, inventory items, accounts payable, or customer checking account numbers. This is at least what I would call prime time, where Benford's Law might work in an audit. This is myself with Weston Smith, and we were having dinner. I think that was sort of June 2016. I'm the one with the blue shirt. Weston is the one also looking at the camera, but with the striped shirt and the dark suit. So this is my most recent publication. This was published about a month or so ago, and you can read the title, you can read the name of the journal on the top left. If you do a search on the internet, you should be able to get the PDF file. You might actually have to pay for it, but you know, not everything in life is free. So, conclusion. Benford's law might work where one person invents all of the numbers in a data set, and those numbers generally invented by people might or might not follow Benford's law. I say it might or might not. I have another study in which I looked at the numbers in textbooks, and quite amazingly they followed Benford's law and they were made up. Lots of different people for number 2, and this type of territory is maybe something like income tax returns, where lots of people have the same incentive to come in just below some control threshold or below some number at which an extra schedule is likely to be required, or just below the number where you're allowed to fill out some kind of easy tax return. But where lots of people all do the same thing, Benford could do quite well here. It's only a first step. Benford is simply there to say, let me look a little harder. And I remind you of one of the earlier slides. Unfortunately, there's not a one-to-one correspondence between does not follow Benford's law, is fraudulent. That rule, that association is not that tight. I say it again. Does not follow Benford's law does not imply that the data is fraudulent. There could be a number of reasons other than fraud for the nonconformity. Benford's law is a start, and I need to look at it with other drill-down tests, and I need to say those drill-down tests are in my book called Forensic Analytics, and if you want to look a little further, also my book called Benford's Law. In the second part, I'm going to be talking about the software, and the software will how we would use the software and what the various things mean. So hang on, and I'll give you the link to part 2 in a moment. Thanks for watching.